What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see bullish confirmation with the follow through and we're starting to see the bulls taking back over control. Could we need a short-term cool down before we go any higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we're up 0.97% and we see SPY closing at the next level of resistance, which is going to be the 50 EMA, and that level is right there at 457. So we got the second day in a row of confirmation back above 450, and we also did close back above the 20 simple moving average. So without a doubt, each and every day that the bulls continue to break through more resistance, the bulls are starting to take over back control. But you can see the bulls are going to start getting very tired. After a very strong 4-day push and slamming right into very strong resistance, there's going to be the possibility that the bulls need to take a rest before they can break out of this downtrend, and that level on SPY is right around 459. So remember that nothing goes up in a straight line forever, and the bulls usually have more work to do, and that's why the saying is the bulls take the stairs up and the bears take the elevator down. So we had that elevator down and we can clearly see that we're starting to get a bounce. So from here, don't expect to just see SPY going straight back up to all-time highs and no pullback along the way. What we're more than likely going to need to see is SPY attempting to break out of this resistance and possibly even breaking out of that resistance. But because this is such a strong level, we could see a little bit of a bear trap here. And this would be a buying opportunity if you're following the technicals, because this is definitely a bullish development. So right now we have to go ahead and think through the lens of a bull, which is going to mean that we need to form a higher low, which means we should not see SPY breaking down below 420, and we should see this level at 428 being the line in the sand that we need to stay above. So in the most volatile scenario, SPY would come all the way back to 428 but not break below it and then continue to bounce higher. But more than likely what's going to happen is SPY will find support right around the 440 level, and then we should see a bouncing confirmation of the breakout, which will be a close back above this previous high. So assuming 457 was the high, we'll start to see a pullback. We'll need to see confirmation that we're getting a bounce off of one of these support levels below. That will be our confirmed higher low, and then we'll be looking for the breakout back above the previous high, and that will confirm that the downtrend is over and the bulls are taking back over full control. So as you can clearly see from the drawing on this chart, this is not something that's going to unfold in just a matter of a couple of days. So what I would warn you to do is be very patient from these levels, because this is going to take a week or two to unfold, and it's going to take some time to get clarity on where we go from here. Remember, there's still the possibility that this was all a bull trap and we're still going down here to take out these lows, but we'll need the price action to confirm it. Now there was a very bullish development with today's price action because we did break back above the low from January 10th. So you can no longer use an Elliott wave count to say that we're going down to a next leg lower in a fifth wave. That can be completely thrown out the window, and that's really no surprise to us because we saw an Apple stock first, and so goes Apple, usually goes the rest of the market. So spoiler alert, we knew this was likely coming a few days ago, and now we have confirmation of that breakout. That's why I always tell you to look at the market as a whole and don't just look at one section of the market. If a stock like Apple is breaking out and telling you the bear scenario can be thrown out the window, you can probably safely assume you're going to see the same exact thing unfolding on SPY and the triple Qs just a few days later. So watch these critical support levels to the downside right around 453 to 450 and the support trend line at 440, and the bullish breakout level will be back above about 459, and then we're clearly back on the bull and we're going to start attempting to break out to a new high above 472. Remember, this is going to take weeks to unfold, so be patient and watch the price action at these critical levels. Jumping over to the NASDAQ 100 triple Qs, you can see we're up 0.81% today, and you can see the triple Qs also closed back above the 20 simple moving average, and we also did get a bullish breakout back above that level right around 367. So just like I said with SPY, the bulls are likely getting very tired and they had to do a lot of work to chase away the bears and get this bullish breakout. So there is going to be the chance that they need to rest, and that's why you're looking for a pullback in the short term. If for whatever reason we continue on this rocket ride higher and we don't need to cool down, you're looking for the next resistance level right around 376 to 377. But more than likely, a lot of energy was used on this bullish breakout, and we're going to need to see a higher low forming. So watch these support levels at 360 and 352. And remember, that would be the higher low scenario, which is the bullish scenario. And then we would look for the breakout back above the high to confirm we're going back into another bull market. Now, if for any reason we see the triple Qs breaking down below 340 and then coming back down to 334, that is going to be your bearish scenario, and that could mean the stock market is going into a bear market this year. But as long as this low at 334 is holding up and we see the triple Qs making a higher low and then bouncing, that is going to be a bullish development. So you will want to be paying very close attention to the price action over these next few days going into the next couple of weeks. Now back above 377, the triple Qs are getting right back on that bull, and then you're looking for strong resistance above 377 right around 388 to 389. On the Dow Jones, we were up 0.59% today, and we see the Dow Jones did close one of our gaps, so that gap at 356 is no longer there, and we did get a bullish breakout above this resistance trend line. So you're seeing a common theme here where the bulls are getting breakouts across the indices, and don't forget the Dow Jones left one more breadcrumb that tells us we still have higher to go yet, which is that gap fill up there at 360. I cannot see any scenario where the stock market is going into a bear market without the Dow Jones filling that gap at 360 first, so use that knowledge to your advantage. There's no reason to be getting overly bearish when you see Apple stock looking bullish and the Dow Jones still has gaps to fill. So now that we got the bullish breakout, your next levels of resistance will be at 359 and the gap close at 360. And back above 360, we're looking very bullish, and it does look like the Dow Jones will attempt to break out to a new all-time high. So watch for resistance at 365 and 368. Now to the downside, if we need to see a little bit of a cool down, you're looking for support right around 354 to 347. And if we break below 347, you still have support at 344 and 340. We'll need to stay above about 340 to 338 to keep the bull scenario alive. So watch those very critical lines in the sand, because if we start breaking below those, we could be going into that bear market. On the Russell 2000, we were down 0.99% today, and we came back down to that breakout level right around 201. And so far that level is holding up as support. Remember, the Russell 2000 is clearly in a bear market, so we're trying to see if we're going to get a bullish breakout, but you can't get overly bullish until you see confirmation of the breakout. So the bullish breakout levels will be back above 212 and then back above 219. And right now what we're seeing is not a bullish breakout, it's just signs that we could be turning the corner and starting to head back higher. So watch that critical support below at 196, and we will need to stay above 191 to keep the bull scenario alive. Below 191, we're likely going all the way down to 170 with support on the way there at 183. On the ARKK ETF, we were down just over 5% today, and we see ARKK starting to pull back, finding resistance at that negatively sloping 20 simple moving average. So this is a constant reminder that this is in a strong bear market with a strong downtrend. So you really can't get bullish until we see that bullish breakout back above about 85 to 91. However, there's still the possibility that ARKK did see a bottom down here at 65, but we still do have this gap to fill right around 69. So we could still see a cool down period to go down to fill that gap. And then if we can see a very impulsive bounce and take out this high at 77, that could be evidence that we did see ARKK bottom and it's going back into a bull cycle. However, it's still in a downtrend, so you need to respect the fact that we do have a lot of momentum to the downside. So if support breaks down at 65, look for the next support level at 60. On the VIX, we were up about 0.5% today, and we see the VIX closing in the second day in a row below 24, so we're definitely starting to see volatility and fear leaving this market. We're not out of the woods for the bulls just yet until the VIX closes back below 20, so watch that critical breakdown because that will be a bullish development. If at any point the VIX starts spiking impulsively and getting back above 24, be a lot more cautious because we could be going down for that next leg lower. On Bitcoin, we're currently down around 4%, and we see Bitcoin is struggling to break out, finding resistance at 39,000 and failing to close above that level. So it does look like Bitcoin is going down for another leg lower. Watch support down here at 35,000 and then down here at 30,000. And if we break below 30,000, we're going all the way back down to 20,000. Your bullish breakout levels will be back above 41,000 and then back above 46,000. And don't get bullish on Bitcoin until we see a bullish breakout. On NVDA stock, we were up 2.45% today, and we closed just below the 20 simple moving average. So we still do have the bear trend. We're starting to get this bullish breakout back above this level at 250, but we won't have confirmation that we're going back on the bull until we can get back above about 271. We still have a gap to fill down below at 228, so look for the downside support levels right around 243, 236, and 228. And if we break below 228, you're looking for a retest of the low at 219 or 209. If 209 doesn't hold up, I do think the bottom is going to be somewhere around 197 to 192. But for the time being, there's still the possibility we form a higher low and then try to get that bullish breakout, and we do have earnings coming up in about 2 weeks. On Tesla stock, we were down 2.75% today, and we closed just above that support level at 900. We still have this gap to fill below, so if we break below 900, it should be a very quick trip down to about 859, and we have that strong support level right around 815. If we ever see Tesla closing below 815, you will need to be very cautious of a bear market because Tesla could be going much lower. So watch that very critical level right around 815, and the next bullish breakout will be back above 939 and then closing back above 1000. We have the full bear trend, so you can't get bullish until Tesla sees the bullish breakout, and we still have downside price targets with the gap fill and a downtrend, so we still could see Tesla coming all the way back down to the 700s. So respect the fact that it's in a downtrend and don't get bullish until you see confirmation of the breakout. On Apple stock, we were up 0.7% today, and we still see Apple stock being a honey badger, defying all odds and going right back into a bull market. We got the full bull trend today, and remember what I told you, as long as Apple is above 168, you need to stay bullish because it does look like it's going to try to break out and form a new all-time high this year. Your bullish breakout level now is above 176 and then above 182, with your price target up there at 188. Downside support will be 172, 168, and if we break below 168, we could be coming back down to 162. But if that level doesn't hold up, be cautious because this could have been a bull trap and we could be going lower with downside support at 157 and 153. For the time being, this is looking incredibly bullish, and with that bull trend, you don't want to ignore the fact that Apple is a market moving stock and it can help drag the rest of the market up higher with it. The financial sector was up 0.68% today, closing back above all the moving averages and starting to look very bullish, only a few days away from having the full bull trend. Don't forget, there's still that gap to fill at $41. The industrials are up 0.7% today, getting very close to getting back up to that 50 EMA, and there still is a gap to fill at 106. The healthcare sector was up 1.35%, running its head back into resistance at the 50 EMA, and there's still a gap to fill all the way up there at 141. The energy sector was up 0.32% today, slamming into resistance and still looking very bullish with bullish price action and a bullish trend. But don't forget that it is getting overexhausted the higher it goes, and we still do have two gaps to fill to the downside. So jumping back over the S&P 500, this is definitely going to be a very critical level of resistance, and it's not a resistance level I think the bulls can blast through easily. So expect to see a little bit of a cool down and possibly even a significant pullback, and I do think that is going to be the next bear trap. Don't get bear trapped, just like I told you, don't get bull trapped, and I was just going over this yesterday that if you were panic selling down here, please do not be panic buying up here. If you panic sold down here and you panic bought up here, you are going to be in for a very bad time. Make sure you have a disciplined trading strategy and you're sticking to it, and most of all, make sure you're using proper risk management and staying patient. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With a volatile market and a brand new trading year, now is the best time to be a bank member. You could see even in a bear market like 2008, Bank Trade Alerts beat the market that year and made over 90%, and Bank Trade Alerts has never had a negative year. You can find out all the information and how to join Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade, and I'm bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.